The big question, can Wall Street break its 6-day losing streak? Let's turn to CBS News business correspondent Anthony Mason at the New York Stock Exchange. This is getting old, Anthony.
It sure is, Maggie. I'm sorry you're not down here with me today. There is some good news this morning. Most overseas markets rebounded overnight after several Asian central banks followed the Fed's lead and cut interest rates. There are also reports that the U.S. government is now considering taking ownership stakes in many U.S. banks to try to unlock the credit markets. The Fed and the Treasury have been throwing everything they can think of at this financial crisis. Loans, bailouts, rate cuts, but so far, nothing has been able to crack this crisis of confidence.
For the sixth straight trading session, stocks slid. Not even the Fed's emergency rate cut was enough to turn the markets around.
It's taken us 20 years to get here, and it'll take us a while to get out.
As the credit markets remained frozen, Treasury Secretary Henry Paulson urged patience while the rescue package is implemented.
The turmoil will not end quickly, and significant challenges remain ahead.
Paulson refused to predict when the U.S. economy will recover, but recession warnings were flashing as 3 out of 4 major retailers reported disappointing September sales, setting the stage for a grim holiday season.
It was 1 year ago today that the Dow hit its all-time high at more than 14,000. We have fallen nearly 35% since then. The Dow is now below 9,300, and traders are still wondering where the bottom is. Maggie?
Hi, Anthony. That's the million-dollar question. Where is the bottom? So let's ask the billion-dollar man. Joining us now is Steve Forbes, president and CEO of Forbes Incorporated, also an economic advisor to John McCain. Good morning, Mr. Forbes.
Good morning, Maggie. Thank you.
Thank you. I know that no one can predict where the bottom is, but what do you think? Are we just beginning this slide?
No, I think actually we're getting near the bottom. And the trouble with these bottoms is when people give up hope. That's when the thing turns, what they call a capitulation. So in this kind of a market, the thing to keep in mind is your emotions are your enemy. And that's why most people do so poorly in the market. When the market's going up, they say, is it too late to get in? And they get in at the highs. When it goes down, they say, is it too late to get out? The key thing is be steady. If you're a younger person, keep putting in a certain amount each month into mutual funds with low expenses, because it means when the market recovers, you'll have more shares, dollar cost averaging. It works. If you're an older person, as you get older, just make sure you put more of your assets into bonds and CDs, so if the market takes a hit, you're not going to lose what's left of your hair.
I'm sure you've taken your own advice. Has this crisis affected you personally?
Sure it has. In terms of I have a few equities, a few mutual funds. They've gone down. I just remind myself, we had big market breaks in the 1970s. We had a big one in 1987. This crisis is unprecedented, and unprecedented measures have to be taken. But the fact of the matter is we will eventually recover. And those who panic usually end up with less than those who have the steel and don't let their emotions get in the way.
Hard not to panic when nothing seems to be working. I want to ask you about a couple of headlines today.
Sure.
The U.S. government may now buy ownership stakes in some banks to encourage lending. Do you think that will work when nothing else has?
Well, the key thing is the $700 billion facility they passed. Don't try to set up a nice, elaborate program. Realize this is an emergency. Get the money out. Another thing they've got to, take equity stakes, whatever it is, get the toxic loans off the books so banks can start lending again. There's no shortage of money in the system. But people fear, so they clutch the cash. They're not willing to put it to work, so the economy gets hurt. And another thing they have to do is this crazy accounting rule that is forcing banks to write down the value of assets at distressed sale prices. It'd be as if you were told, sell your home tomorrow morning at whatever price you can get. Well, you're going to get a huge loss. Don't do these fire sale price accounting. Do as if you're going to hold the asset for the long term. If you look at most of the losses in these banks, those are book losses, not cash losses. So if they do a few sensible things, we'll start to climb out of this thing.
We don't have much time left, but, the presidential candidates were asked who they would choose to replace Hank Paulson as Treasury Secretary. You interested in the job?
They're not going to offer it, in part because they're afraid I might accept the thing. But the bottom line is, the key is you need capable people, but you need the right policies. And one thing the
Would
next
you
president
lobby
has.
For it?
No.
No.
But one thing the next president has to do is realize they've got to do good stimulus for the economy, the way John Kennedy did in the early 60s, the way Ronald Reagan did in the early 80s, big tax cuts, look at what's clogging the system, and then we'll get growing again.
You must be twitching with all this talk of part nationalization of banks and all these government bailouts. You're a Republican and a capitalist.
Well, when you have an emergency, you take whatever steps are necessary to get the system working. This is about saving free markets. You do whatever it takes to get them revived again. When a patient has cardiac arrest, you don't worry about the brand of the defibrillator. Get the job done.
All right. Steve Forbes.
Maggie, thank you.
Thank you very much.